Obviously, NVIDIA has been our focus and the main driving force for figuring out which way the market goes every day. But the next 48 hours, we get a lot of economic data. And it looks like, judging by the bond action today, investors might be tuned in for a more macro-centered trade. Now, my risk radar had an important pivot on the 14th. That was dropping the green light from stocks in exchange for a yellow for stocks and then a green light for bonds, which is reflected in the strong environment and demand for treasuries and a little bit of chop in equities since NVIDIA slipped. But there's a few signs that maybe there could be some revisions in store. Notably, the yellow light on my dollar has been in a bit of tension with the green light for bonds because this correlation is getting trickier to figure out. It used to be very reliable. Yields go up, dollar goes up. But lately the dollar's been going up while yields have been pinned lower. The dollar chart today is starting to almost break out again. Not quite yet, so I don't have the green light on the dollar, but I really need to be tuned into this. This is a 3-month chart that shows we're drifting back into the higher range for the dollar. Now there's a lot of trade between 105 and 106 in the dollar, so if we get through there, the green light goes back on. But until we do, I think it's reasonable to expect quite a bit of chop. The dollar case is more about there not being much downside because we can't cut. But depending on how the numbers come in, namely inflation and core PCE on Friday, if that comes in light, then the dollar likely returns back lower to the bottom end of the range. Yields also then would likely come in lower too. But here's the thing, today's bond sell-off was kind of curious. There's a lot of chatter about the Bank of Japan and what might be happening there, but we always kind of hear these rumors that sovereigns are going to start selling treasuries, and it's never really been the main driving force. I think generally bonds might just be getting a little bit aligned for the next 2 days of data to explore a bit of a wider range. If you look at the 10-year, it's been pretty well anchored within a range for the last 3 months. Hasn't really moved a ton. It's been downward drifting. We're basically at the lows for the last 3 months. And then the last week, it was really pinned there around that 425. So today's pop in the 10-year is somewhat notable, but I don't foresee any real changes for bonds anytime soon. In order for the yellow light to come back on for bonds, you'd have to get the 10-year yield up to like 4.45 and 4.5 to at least put in a higher high on the chart, and it looks like we're still a ways away from that. Even if inflation comes in warm, it's not an obvious catalyst for yields to go higher if it's going to apply stress to the economy at this point. And that's still my baseline. Economic data have been missing expectations. New home sales today were weak. The housing trade looks like it's about to crack. The cyclical stuff in the equity market does not look good. There are a lot of reasons to think that even if inflation stays sticky or problematic, it's not because the economy is revving back up again. So the trade-off still seems to generally favor bond bulls. Maybe dollar bulls too if inflation comes in warm, but the bottom line is there's a lot of mixed elements right now between bonds and the dollar that hopefully we'll get some clarity on. But the last thing also is the yield curve, and that's really going to tell us the why and the how, because the 10s and the 2s are very low on the end of their range. And to me, that tells us that the market is sussing out a bad combination of growth versus inflation. And I think that's why the dollar bond trade is getting more confusing, is because the dollar can't go down if the Fed's not going to cut. But yields don't necessarily have to go higher if the Fed can't cut either. So bonds seem to be a little bit more range bound. Dollar also catches a bid when there's risk off tone in the market, and it seems like there still is some of that lingering with NVIDIA's struggle today and Bitcoin down. So hopefully the next 2 days will give us a little bit more clarity, but I'm generally feeling pretty good about where my risk radar stands right now. But there definitely is a big data dump over the next 48 hours. The dollar might be ready to show a little bit more extra strength. We'll see if that comes true. I'll see you in the morning.